Hello everyone and welcome back to the show. This is Pili Yarusi here today and we're talking about the five five-step program of passive investing. I am super excited to be talking about investing goals today. Last podcast we talked about what financial freedom meant to you, what your big why was, and a lot of it had foundational work. This is also very much foundational work. But now we want to talk about what your financial goals are, what your investment goals are. What do you want to do? What do you want to see done with your money? Because the thing is, no matter how you make your money, chances are you work very hard for that money you make. In the first session, we talked about losing it all. What if you were to balance your entire financial situation, and many of us do or have, on one stream of income, our job? And what if we were to lose that job? Or what if, because we're in a bear market right now, what if you had put all of your money into crypto? The crypto market is very, very down right now. Or if you put all your money into stocks, or a particular stock that just blew up the bad way. What happens if you put all your eggs in a basket and you drop that basket? Broken eggs and a really big mess to clean up. So what we're going to discuss today is really diversifying and using passive investing in real estate to help you diversify your portfolio, help you take your one income stream, if that's a job, and use that money to make more money. That's what large apartment investing does. And the thing is, I just spoke to this amazing woman, amazing entrepreneur, has created multiple businesses. She has an educational program teaching people how to work within the crypto and NFT markets. Amazing individual. Had a discussion with her, talked to her about what I do, and her face kind of went blank. And I was like, wait a minute. Your face just went blank. What's happening here? She was like, oh, I'm so sorry, but you know what? I've tried to study real estate. I read the books. I can't, and I'm a smart woman, Pili. I don't get it. And there's so much information. There's so much to take in. There's just almost too much. And I told her, I was like, the great thing is, if you know me, if you know some of my friends, you don't need to know everything. Now that comes with a caveat though. You need to know a lot. You need to know how to look at finances, how to know what you're looking at, and how to vet sponsors. So those are two aspects. But if you have, and this is why I keep on going back to invest in good people. If you invest in good people who are there to teach you and be with you along the way of your investment, then whatever your investment goals may be, whatever you do in life, whether you're in crypto or NFTs, or you are a restaurateur, or you ... engineer, doctor, whatever you do in real life, that person who has devoted their life to learning the craft of real estate can help you along the way. Real estate professionals learn and educate themselves on a regular basis. I wouldn't want to go to myself to see if something was wrong, like a doctor. I'm not a doctor. I'm not going to diagnose myself, although sometimes I'd like to think I can. But that's where we get into trouble. Same thing with real estate, kind of. Definitely not doctors, but you get what I'm saying. If the real estate world scares you in any certain way, then put yourself within people who can explain it to you, who can let you know, this is what this means. This is how we do this. This is how we're going to take your investment and multiply it. So put yourself around the right people So whatever your investment goals may be, make sure you're with the correct people to help you get to those goals. So now let's talk about your goals themselves. We've already established that you need to educate yourself some, at least enough so you can be an educated investor, a sophisticated investor. Next step is to put yourself around people that know what they're doing, that you trust, and that have a great standing within the community, and that have experience that they can draw on, an experience that they can show you. Third is to know your investment goals. What exactly do you want to do with your money? And it's very dangerous to simply give an investor, a real estate investor, they could be a flipper, they could be a wholesaler, they could be in notes, they could be in Airbnbs, they could be in large apartment real estate like myself and Jason. Whatever it is, you need to know what they do and what the return on your money may be with them. So with Jason and I, we like to give our investors anywhere from a 6 to 8% preferred return. That means no matter what, our investors get paid first. The returns that come, that first 6 to 8% return that comes out of a cash flowing property goes to our investors first. Then we do a 70-30 split, which ends up in a waterfall if we perform. So if we make the building perform and we bring it to a certain return on investment or a certain IRR, which is an internal rate of return, then at that point it may go to a higher split. But at the first, we want to make sure our investors get taken care of first. And you do have to understand that usually a multifamily investment can last from anywhere from a year to 3 years, 5 years, and sometimes it's underwritten into 7 to 10 years, depending on the type of investment. So you have to understand that your money, when placed within these large apartment investment firms, you might not see that initial cash back to you. Now, we like to refinance our properties. We like to take the cash out and give it back to our investors, but that's never promised, ever. So know what you're getting into. Know the timeline of your investment, when that initial investment is going to come back to you, when it might come back to you. And then establish for yourself that these are investments. They're risky. Investing has innate risk built in. But real estate in general has been shown to be the biggest wealth builder ever in the world, however you want to put it. It's the biggest wealth builder. So regardless if you're doing large multifamily or if you're going to go with a flipper. Jason and I used to flip houses. Usually the house flip takes anywhere from a few weeks to a few months to maybe a year, depending on the type of flip it is. But it's a quicker turn on your investment. And then whatever the percentages you work out with that flipper is the return on your investment. But those are usually quicker flips. So it just really depends on what you want to do with your money and how quickly you want to see that return. So again, it comes back to the people. What type of investors do you want to invest with? Make these decisions, really know what your investment goals are. How much of a return on your investment do you want quicker? Do you want long-term? Do you want to get those tax advantages that you get in certain types of real estate? All of these things are things that you need to take into consideration. It's things that Jason and I can talk with you about. So if this is something that you want to take the next step on, please comment below, let us know. In fact, down below, we'll put a way you can get a hold of us to invest with us and invest in what we're doing. We continuously have deals that we put out that investors can jump in, investors just like you. So let us know how we can help you. And if you loved what you heard, please rate, review, subscribe. It would mean the world to us. Thank you so very much, and I will talk to you later. Aloha.